So how did auctions perform over the weekend?
Pretty well, Pete. Across Australia's capital cities, the average clearance rate was about 75%, and there was about 2,065 auctions occurred across Australia, roughly 100 less than the week prior, but 900 less than the same weekend a year ago. CoreLogic say for the last 5 weeks in a row, the clearance rate has been at about 70%, and they're expecting it to stay that way throughout December. In Melbourne, there was about 874 auctions. Clearance rate down there is 74%. The same weekend a year ago, though, there were almost twice as many auctions in Melbourne, 1,520. Sydney held roughly the same number of auctions as Melbourne over this recent weekend, 871. Clearance rate is a little bit higher in Sydney of 80%. And so stock levels, they're still a little low historically, but it is slowly growing, and the auction clearance rate is at a pretty high level at the moment, Pete, and looks like it will continue throughout Christmas.
Ed, what about iron ore at the moment? It's been on an absolute tear, a 7-year high. What is the outlook for iron ore, and the price in particular, going to be over the next 12 months, in your opinion?
The outlook is looking really good, and it's a great thing for our budget bottom line and Australia's iron ore companies that are all listed on the stock market. So the iron ore price last week reached about $137 a tonne, and over the weekend it's now risen further to $145 a tonne. The price is being driven up by Chinese demand, and also the Brazilian miner Vale announcing it's not going to be able to produce as much iron ore next year as previously forecast. So a bit of a supply shortage. According to Commonwealth Bank analysts, China normally accounts for about 70% of the world's iron ore imports. However, due to COVID, China has decided to boost its economy by building and construction. So it's currently importing about 76% of all the available iron ore in the world. CBA expect the price of iron ore to slowly start to decline from where it is at the moment. However, they believe it's still going to be above $90 a tonne by the end of next year. Our budget in October is predicting iron ore to fall to $55 a tonne in June next year. So if iron ore really stays this high for a lot longer, it's going to boost our budget balance sheet by billions of dollars. And you look at some of our iron ore miners, Fortescue Metals, its share price is up 93% this year, BHP up about 7%, and Rio Tinto up about 13%.
Yeah, all right. And what more locally on the stock market are you expecting today, Ed?
Locally, stock market's going to probably rise by about 0.6%. There was American markets all finished at record highs a couple of days ago, which is sort of unusual with all of the levels of COVID infections there. But American markets are at a record high. That positivity is going to come through to our market today. And really, it's watch the iron ore miners today, because they should really rise again. And I think it's going to be a strong day for resources companies.